Unless you've been living under a rock the last couple of weeks, artificial intelligence has been all over the news. Personally, I don't think there is any denying the potential growth in this sector, and experts are expecting this to grow into billions of dollars over the next few years. But the question is, can you take advantage of this as a dividend growth investor? In this video, I'll introduce to you 3 top dividend paying stocks that are poised for growth. See you on the inside. Hey dividend investors, welcome back to Dividend Talk. My name is Derek and today I'm going to discuss my top 3 picks for AI-based dividend growth companies. But before I get into that, it would mean the world to us if you would hit the like button and subscribe to us, and maybe hit the notification bell so you never miss any more of our videos. Now let's get right into it. If you're looking for pure play AI based companies that pay consistent dividends, you may be out of luck. Generally speaking, these are technology companies that are new or startups or very young in their business journey, and they like to reinvest their profits into research, development, marketing, just to expand their business, and it's probably not the best decision to pay dividends. However, we are looking for more mature companies in traditional industries that are not really pure play AI companies, but AI will play a significant part of their business either now or going forward. So with that said, let's get into the first company. So of course, the first company I picked is an Irish-based company called Accenture, ticker symbol ACN. Accenture is a multinational professional services company that provides consulting, technology and outsourcing services. The company has a significant presence in the field of AI and uses a range of products and services to help clients improve their business operations. They do this by driving innovation by strategy and planning, data management, machine learning and natural language processing. Just reading through the report, you can see artificial intelligence has been mentioned 9 times in the 2022 report. So an example of some of the services that they offer is Industry X, which they help industries try become a little bit more competitive in the fields of robotics, AI, IoT and so on. In doing this, they help create new hyper-personalized experiences and intelligent products and services for their customers. What I also like about this company is that they have established strong partnerships with some leading companies in the AI space, such as Microsoft and Google. As you can see here, they are partnered with Microsoft, which is a company we speak quite a bit about on the podcast. For me, this is a sign of strength for a company like Accenture to be partnering with such a company. So let's have a quick look at their financials. The company currently trades at a forward PE ratio of about 23.9. The dividend yield is also 1.62, which is a little bit low for my liking. But if you look at the financials, they actually look quite strong. You can see the revenue growth year over year. It is over doubled since 2013, and we see something similar then with the net income. I prefer free cash flow over net income, and we can see, look, that has gone from nearly 3 billion up to nearly 9 billion. And compared to the dividends that's paid out, their payout ratio is quite conservative. So you're probably looking at about maybe 30-40% payout ratio for these guys. Also, if you look at that debt, I mean, I love to see this on a balance sheet. It is almost not there. I mean, compared to the free cash flow, I mean, it's virtually no debt on the balance sheet. So it is quite a strong company performance-wise, and you can see why it's trading at a PE ratio of around 23.9. Along with a fairly strong balance sheet, they also have quite a decent annualized growth. You're looking at a 10-year annualized growth rate of 10.9%, and that's on dividends. So I mean, you do get quite good returns off these guys. My only issue is that they did cut the dividend in 2020 and it hasn't yet reached the levels of what it was before that. So that is a concern. Even though the growth rate is quite strong, they have cut the dividend. It's a little bit conservative if you ask me, because the free cash flow more than covered the dividend. But we tend to see that with European companies, they always be a little bit more cautious when it comes to the dividend, which is a shame. For me, it's really the only sticking point for me is that dividend cut, and also it's a pretty low yield. For a company like this, I would prefer the yield to be a little bit higher, but nevertheless, it's a strong company, and I think it is brilliantly placed to take advantage of this AI revolution that could be happening. Company number 2 will come as no surprise to many of our podcast listeners, and that is Microsoft, ticker symbol MSFT. Microsoft is a technology company that has a significant presence in the field of artificial intelligence. The company has been investing quite heavily into AI research, and they are going quite hard to try and disrupt Google with their new Bing. So I don't know if you're like me, but Bing is something that I only ever use to find Google on. But Microsoft are now going to try and use a more AI-powered Microsoft Bing to try and enhance our experience. Look, I've tried it. It's still early days, and I'm not quite sure I'm going to switch yet. But some of the products that they have is Microsoft Azure AI. They've got this Microsoft Power Platform. Even Microsoft Teams has got some AI features into it. So keep an eye on Microsoft, as I think they will be a pretty big player in the AI field in the future. Just quickly looking at some of their financials, they've got a forward PE ratio of 26.1 and a pretty low dividend yield of 1.05%. Again, their annualized growth rate is quite substantial, so you're getting around 11.7% annualized over the last 10 years, and their last increase was around 10.17%. Again, it is a low dividend yield, and we say that again with Accenture as well, but I feel like any technology companies like this tend to keep their yield low and their payout ratios low, and maybe reinvest into their company so they can grow a little bit faster. So if you don't mind having a low dividend yield but a high dividend growth, Microsoft could be a company you could consider. And the last company I'm going to choose today is Intel Corporation, ticker symbol INTC. You'll often hear us talk about Intel as a turnaround company, so how could they possibly be involved in AI? But genuinely, Intel are trying to be at the forefront of the AI revolution by developing cutting-edge technologies such as AI-ready chips. These are known as AI accelerators, and pretty much they are designed to handle the complex computations required by AI systems such as deep learning and neural networks. Neural networks takes me back to my days in college, but Intel, I think, are well placed to try and have a leading position in this industry. I know Nvidia are a huge rival as well, who are also heavily in this field, but I'm focusing pretty much on dividend companies. Again, we'll take a quick look at their financials. They are trading at a whopping 50.5 forward PE ratio and have a dividend yield of 5.29%. The annualized dividend growth rate over 10 years is 5.31%, and typically you can expect a 5% dividend increase over time. However, in saying that, I don't believe that the dividend is safe at the moment. We can see that Intel generally like to create a lot of free cash flow, and I had no real problem in investing in them when the free cash flow was growing, because I always felt like that they would pay the dividend. But if you look at last year, if you look at that free cash flow, it's negative, and it doesn't really paint a pretty picture. And the balance sheet is quite strong, and we can see revenues is, or at least was, stable. We are seeing a little bit of decline, particularly in the PC centric business. So I do believe that the dividend is at risk. However, if Pat Gelsinger can turn this company around, I think it could be a great prospect. Again, we call this a turnaround play. It's a turnaround play for a reason. I think it is definitely risky. It's probably one of the more riskier of the three, but they are trying to position themselves well. I think Intel, if they can manage to get out of this current slump, I think that it could be a good bet within the next 10 years. So there you have it, 3 dividend companies that have the potential to grow in the AI space. As I said before, if you want a pure play AI company, you're probably not going to find one that pays a dividend, but there are certainly good options out there. Hey, I hope you liked this video. Please consider subscribing and liking the video, and I will see you in the next one.